All right, so what I've given you first is I've given you the take-home final. It should be pretty easy for you since it's basically a modification of the exam that you just took. So you're just going to reinforce your evaluation for the firm. You're going to do the stock valuation and the investment decision-making matrix. That's basically the heart and soul. You walk out of here with those skill sets, you walk out with a lot of really good skills. Okay. Obviously, I could have, made it harder, by including financial statement analysis. That's like that's a whole semester. I mean, you get that in your financial accounting, you get some of it in your managerial, and if you're a accounting major, you're going to get that in your intermediate. Okay. But really, what I was trying to do here is the methodologies of intrinsic valuation along with capital budgeting and really creating a solid understanding of the method itself. You can fill in the details later. But I also did, let's talk a little bit about what we're going to do on the final day. So the final day, you're going to come in, we're going to chill out for about a half hour. You let me know what you want, if you want cheesecake or carrot cake or pumpkin pie or whatever it is, you let me know, and I'll bring it. And then what I'll do is for about 40 minutes to an hour, I will do an exit lecture, which is a seven-module system that I developed over the last 7-8 years for some executives. And I will walk you through that system that I developed. And the goal of the system is to basically give you some intellectual infrastructure for you to be able to move forward more decisively in your academic and your professional careers. And when you're confronted with a decision, either complex or simple, mainly complex decisions, you will rely on that information to be able to make decisive decisions and know that the decisions that you're making are correct, because we haven't invented the time machine yet, so that if you make a bad decision or you make a mistake, that you can basically go back in time and correct for it. We haven't invented that yet. So you have to have this intellectual infrastructure to be able to make decisive decisions, both academically and professionally, and know that the decision that you're making is correct. Because it's some of the decisions you make, if they aren't correct and you do make a mistake, some are irreparable. You can't go back and correct it. Some of them you can go back and correct, but it's usually very costly in regards to money and time. So if I can save you any money and any time and accelerate the decision-making process and know that the decisions that you're making are correct, then that's my objective from that exit lecture. Okay? And then we'll chill out, or you can do whatever you want for the last 20 minutes of the final period, unless you want to take a final in the final period. Anybody want to take a final in the final period? No, okay. And then you'll bring me the deliverables, okay? And then what we're starting now, since we finished the first 2/3 of the class, is now we'll focus on the applications of a lot of the skills that you've developed over the last couple months in the course. What you're going to do now is you're going to be in your teams. Does everybody have a team? Everybody have a team? Everybody like their team? You like your team members? You got any issues with your team members? You don't have 4 per team or 1 per team? I got a problem with people who have 4 or 1. Teams of 4 and 1 are problematic. Teams of 3 are perfect. So anybody got teams of 2? Because I can handle 2 teams of 3 teams of 2, because I can split them up and make 2 teams of 3. So do you have team 2 in your team? Everybody have 3 in your team? Except for you guys, we split you guys. You guys can work in sub-teams, but the teams with 2, you have to produce a document, but you can still work with the other teams, okay? So I don't have a problem with that. This is what you're going to produce, okay? You're going to produce this pitch book, all right? This is also called a deck, all right? And this pitch book and this deck is basically what you're going to be using to communicate to your clients, to senior level managers, the investment committee, to the board of directors. This is basically the standard pitch book and the standard deck. Usually you might have specialized marketing staff or communication staff that will basically help put these decks together on your behalf, or if you were like me, I had to put these things together as the finance guy, or or the economist, or the research director, or the director of research, or director of index management, whatever I was. I either had to put these together, or I worked with the marketing and communications team to put these together, okay? So I picked the best of these from the last couple years. I threw out the ones that had errors in it, I threw out the ones that didn't follow the instructions, and I threw out the other ones that just looked bad, okay? So these that you have in front of you are actually pretty good. I would recommend that you swap these amongst each other, and that you take at least, take pictures of at least 3 of these decks, okay? And I'll go through the resources that are available to you also up on the website, okay? So I'm gonna walk you through the expectations of the deck, okay? And one of my students invented this deck. She was a graduate student at Golden Gate University, and then over the last 5-7 years, I've been working with students like yourself to perfect this thing, to try to get it so it's totally perfect. Because between the memos and or maybe parts of the deliverable packages, this and the memos are the 2 instruments that you will be using, or I highly recommend that you use as part of your portfolio, your professional portfolio, that you can bring in or send people when you are prospecting for internships and jobs. Because they're gonna ask you, do you have anything that can show us the type of work that you can do? And that's basically it, okay? So this is one, and the memos are the other. So the first thing in regards to this deck or this pitch book, and this is the final versions, okay? And I had worked with all the teams back and forth to correct this thing and get them perfected so that then we could go to production. And then what I would recommend is that only the leader hand this in with their deliverable, that I would make extra copies for my teammates, or maybe an extra copy for yourself, because when you bring these into that potential interview, they're gonna wanna keep it, okay? They're gonna wanna steal it from you, because it's really good, okay? And this is basically graduate. Do you guys do this in your other classes? No? Okay, this is like graduate level stuff. This is what you do when you're in an MBA. You're doing case studies, you're working on projects, you're putting together these decks and these pitch books, and this is the main instrument along with your formal PowerPoint presentation, is the communication device that you're going to use to communicate your recommendations and your research results. So the first thing that's extremely important is that you have a clear cover. Now, I already talked to the print shop, which is underneath the power plant, and they will have all of the material that you need, and that's all you got to do is go down there with a flash drive or send them the PowerPoint presentation once I've approved it, to then go to production, okay? But you got to have a clear cover, not an opaque cover. I do not like these opaque covers, because, can you show me what an opaque cover looks like? Yeah, you see how that's kind of foggy? And this is really clear and sharp. So the first thing that the client or the customer is going to look at is the first page of your report. So it's the most important. If there's any errors or miscommunications in the first page, you're going to turn them off, and they may not read it, okay, and then you're in trouble, okay? So they need to be able to see it. So the clear cover is super important. Then this wire, black wire right here, it's got to be this black wire, okay? Nothing else, okay? These reports are extremely specific. We've been refining them for years here. And I know that this is what we use in the real world, because this is how we used to produce it. And then you're going to have a black back, okay? Clear cover, black spiral binding wire with a black back, okay? Then on the front of the very presentation, we're doing Goldman Sachs, okay? Goldman Sachs is one of the top 5 banks in the United States. The top 5 banks in the United States control over 50% of all the bank assets. So this group of banks are extremely professional. They only hire the best people, they utilize the best technology. They're extremely competitive, and Goldman Sachs is extremely aggressive. It's not over leveraged or highly leveraged, but it uses a lot of leverage to juice the return on equity for the shareholders. They only hire the best people, mostly from Ivy League schools, and they run a really tight ship, and they're totally connected to Washington. Most Goldman Sachs senior executives have worked in the administrations of the presidents. A lot of them work on committees. They move between Goldman Sachs and the government and back again once they lose their position within the administrations. So they're totally connected. Okay? Not a lot of the other banks are as connected as Goldman Sachs. And Goldman Sachs uses that political power to its own advantage to create monopoly power and pricing power for the institution. Okay? So right off the bat, I'm giving you JP Morgan, I'm not giving you Goldman Sachs, you're doing Goldman Sachs. So right off the bat, and usually on these things, we know who the firm is and then the logo of the firm. You have to remember, you do not represent Goldman Sachs. You are an equity analyst, a portfolio manager, a public equity portfolio or equity analyst in a large family office, or a public equity firm, or an investment management firm, or a broker-dealer, or a commercial bank, or an investment bank. These decks and these approaches are totally applicable across companies and across different types of platforms. So right off the bat, we know who the company is that we're analyzing. It's a stock valuation, and we have the recommendation right there, right in front of you. So we know who, we know what, and we know what the recommendation is. Then you have the intrinsic value, the price is right there with 1 decimal point. Compared to the stock price, well, the intrinsic value is less than the current price, therefore it's a sell, and we're forecasting a 12% discount. Now, based on your presentations that I sent out to you, you may have a buy recommendation, you may have a sell recommendation, you may even have a hold recommendation. These recommendations change based on the availability of the information at that time period and based on the competencies and the skill sets of the analysts that conducted the research. The students that didn't do a good job or didn't take this seriously made extreme flaws and errors in their presentations, and their presentations are in some dumpster or some garbage somewhere, because I can't use them, okay? I can't use them, and I can't show them to anybody, okay? And then I have my team right there. Do not put the class on here. Just put your team names here. Do not say St. Mary's. Do not say any of that stuff, okay? Just your team, all right? Because I don't want this to be an academic branded product. I want when you show this to somebody that they think that you've been working in industry for a certain amount of time, okay? Then on the second page is your outline that you're gonna make. When you make your formal presentation in professional dress, the best presentations of these decks after you've practiced, presenting the deck and then practice the transitions between the individuals on your team, these decks take, the best presentations are 5 minutes. Good presentations that go a little too long are 8 minutes. Presentations that go 10 minutes, you totally lost your audience, and you're probably reading from the slides because you didn't prepare and you didn't study from it, okay? And that's usually what I've seen over the last 5 years that I've been doing this. And I do about, I probably see at least 60 of these presentations per semester, okay, at different universities. And I would say St. Mary's presentations are some of the best presentations that I've seen of the other universities. Okay. All right, so we know what the overview is. And we have the background of the firm, okay? Just a brief dashboard of some key characteristics of the firm. And again, this is JP Morgan. Goldman Sachs is about $898 billion in assets, so it's almost $1 billion. JP Morgan is like, Goldman Sachs is almost $1 trillion. JP Morgan is $2 trillion, okay? So it's twice the size. But Goldman Sachs is more nimble and a little bit more interesting. So I'm really happy we're gonna do it this semester. Here we have the major operating segments. And again, when you show me your presentation and you show me the draft, we may reorder some of these things because some of them are a little out of order. But operating segments, and there should be some stars here next to some of these operating segments of these products and services that basically indicate what products and services and what segments contribute the most to the total revenue of the firm. and what products and services are generating the fastest revenue growth for the firm. That's what we care about. Where's the majority of the revenue coming from based on the comparative advantage of the firm within the marketplace? And what is the ability of the firm to innovate new products and services to grow cash flow in the future to maximize the share price? Okay. Oh, and one thing about this deck too, and this exercise, is this is like your mid-program capstone course. Okay, this is the capstone exercise. So usually take your capstone course in your last semester of your senior year. I'm basically bringing all of that stuff up front into your junior year so that hopefully by being exposed to this, and then by the time you get to your capstone course, you will be doing a better job within the last 2 years of your program, and you'll be totally ready by the time you take the capstone course in less than 2 years from now. Okay, that's the goal too. Then we have the business segments. I like this one too, where actually it lays out the business segments. And I actually like to see an org chart too sometimes. An org charts with the business segments with percentages underneath it that basically tell me what the total revenue contribution in percentage term that those segments contribute to the total revenue of the firm. I like that one too. But this one shows me the segments. It shows me the net income that's generated or the revenue generated from those segments, and then it gives me the percentage of contribution. Then we have the leadership. Now, you have to have 6 leaders on this leadership page. So you marketing people are going to be working on this one, because see how some of these pictures are all distorted because you pulled them off the website? You're probably going to need to use Photoshop to clean up those pictures so that the pictures in the deck actually makes them look like normal people, not like Gumby or something like that. So the marketing people need to focus on this and work with us using the Photoshop. Then it's going to tell you the name of the person, their title, where they did their MBA, and most of these people went to Ivy League schools, and then how long they've been with the bank. Okay, and if you can give me where they worked before the bank, they went to Goldman Sachs. That would be extremely important too. So that's all you need to know. And then what you might want to do is to do some Googling on some of these people. And these people, they cannot be board members. Okay, they got to be people who actually run profitable division lines and divisional lines, not HR person or technology person, you know, or marketing directors. They have to be people that actually run the investment banking division, the mortgage division, the investment management division, actually run divisions within the institution. Okay. All right. That's the leadership. And then there's the SWOT analysis. Okay. When you're reading some of the reports, and again, I'm going to have Sarah Vattel come in on Tuesday, and she's going to take us through how we used Mergent to be able to extract some of the information that you're going to need to basically put this research piece together. St. Mary's has some of the best financial resources that I've seen from any other institution that I belong to and I teach to. You have Standard & Poor's, Dun & Bradstreet, Morningstar, Mergent, you got Value Line, you've got all of these great resources to be able to conduct your research and pull the information that you need to put into this deck. Okay? So we have the SWOT analysis, strengths, weaknesses, opportunities, and threats. The SWOT analysis is going to be provided to you within one of the research reports that are going to be made available to you as the resources. And then you may want to add to some of these to be able to give a current view of the overall SWOT analysis, you know, the overall environmental scan that you will be doing. Okay, and just a little note that Lloyd Blankfein was the president of Goldman Sachs. He just stepped down recently. He's now been indicted on, I guess, some kind of corruption charges because he had been meeting, I guess, behind the scenes and having some, I guess, unethical or illegal discussions with one of the politicians from Singapore. It'll be interesting if that was actually something legally that he could do. or what the actual fine may be that he may have to pay. And actually, a lot of these firms do get fined for inappropriate behavior or illegal behavior. It's basically just part of the operating business for a lot of these institutions, and it's the same thing for most major corporations and technology companies. They plan on being sued, they plan on pushing the limits on a lot of these regulations, and if they have to pay a fine, they pay a fine. It doesn't matter because they generate billions of dollars per year, and it's just a part of operating the business. Okay. Then on the next one, you have the bank rankings. These are the top 5 banks in the United States that control over 50% of all assets within the banking system. These peer group are oligopoly and could potentially even be a cartel, although that would be antitrust and they would get sued for that. But they are basically, it's an oligopolistic, competitive, monopolistic industry structure in which they operate, which I find extremely fascinating. And the reason why these top 5 firms have basically concentrated in economic and political wealth over the last 9 years is because of, after the financial crisis, the implementation of Dodd-Frank, which was the response to the financial crisis, was supposed to break up these banks and to not concentrate power amongst the top firms. But these top firms are so politically and economically powerful that they were able to actually concentrate even more power and market power and concentration and even political power and become and control over 50% of all the assets within the banking system. So you have JP Morgan, 2.5 trillion, B of A, 2.23 trillion, Wells Fargo, 2 trillion, Citigroup, 1.8 trillion, and Goldman Sachs, roughly 900 billion. U.S. Bank should probably be in here, but I don't find U.S. Bank as provocative or interesting as Goldman Sachs. Okay. The next is the financial conditions. Overall financial condition, overall financial position of the firm. When you conduct financial ratio analysis in this format, you are taking the first step in conducting the fundamental securities analysis. This is the financial ratio analysis. This is the table. You will be using 2 sets of financial ratios. Okay? When Sarah comes on Tuesday, you got to make sure you remind me to have her show us where to get the financial ratios for the top 5 banks. Okay? And then what you're going to do is you're going to use the financial ratios for the top 5 banks. Use this table here. You're going to sum up the assets, divide it back to get the weights, and then you're going to calculate the weighted average financial ratios. And the weighted average financial ratios such as ROE, the weighted average return on equity for all 5 of these banks, the weighted average will be used as the peer group. Okay? So I have a lot of problems with some students because they don't know how to calculate a weighted average. They don't know how to program it in Excel. So they take averages of the top 5. Or they just put another bank in there. Or they put the average 3 banks and they put that. I've seen all kinds of stuff done. They just don't do it the right way. Okay? Those, again, go into the garbage can because I can't use them. All right? So the financial ratio analysis is key. So your target firm, you have your financial ratios here by category. Here's the financial ratios. Here's the target firm, which is going to be Goldman Sachs. And your direct competitor, you're going to use JP Morgan. Because JP Morgan and Goldman Sachs battle it out, okay? For investment banking, business, wealth management, you name it, they battle it out. And then the peer group, or the financial ratios, which are the weighted averages for the peer group. And then you have the industry ratios. You have to remind me, please take note, to ask Sarah Vattel where we get the industry financial ratios, okay? Because those are really hard to find. If we don't find them, we'll just do a guesstimate, okay? And just plug the number, okay? And I can help you do that. Then here, what you do is you look at the, let's say the PE multiple. What does the PE multiple tell you about the firm's growth prospects in the future? What does the price to earnings multiple tell you about the growth prospects of the cash flows and the stock price in the future?
How much someone's willing to pay for their earnings right now?
Yeah, so if the multiple is high, does that tell you high or low growth prospects?
High.
High, okay. So you're going to compare the multiples to the direct competitor. In this case, my JP Morgan was equal to B of A, and it was higher than the peer group, but lower than the industry. But I really want to compare it to the direct competitor. B of A is a good bank, so is JP Morgan. The peer group was 1.4, JP Morgan was 1.5, or sorry, 15. B of A was 15, JP Morgan was 15, the peer group was 14. JP Morgan was equal to Bank of America, and it was higher than the peer group. In most cases, all of the financial ratios are going to be higher than the industry. Okay? So what I did was I basically said, okay, it's good. I mean, they didn't beat B of A, and they didn't kill it, you know, higher than the peer group. But they matched B of A, and they were higher than the peer group. Therefore, I'm going to give it a condition of good. So here are the conditions. And you have to use these conditions. Don't use your own conditions. If you see Goldman Sachs PE multiple significantly higher than the direct competitor in the peer group, don't put in rad. You know, this is rad, or this is awesome. You know, don't use rad or awesome. Use what I have up here. So if the target firm is significantly higher, except for the debt to equity ratios and the leverage ratios, if their financial ratios are significantly higher than the direct competitor and the peer, you want to give it an excellent. If it's higher than the direct competitor and higher than the peer, but slightly, or equal to the peer or equal to the direct competitor, but really equal to the peer group, then you give it a good. If it's above the industry average, you give it above average. If it's equal to the industry average, you give it an average. If it's below the industry average, you give it below average. And if it's significantly below the industry average, you give it poor. I just want to make sure I'm recording all this stuff, because a lot of this is hard to remember. So what we did was then, once I analyzed the financial ratios across the row and give them the conditions, I basically step back and I evaluate the overall financial condition and position of the firm using the first set of financial ratios. And for this analysis, it was good, good, excellent, excellent, good. So I said, okay, overall, I'm going to give it an overall financial condition and position using this set of financial ratios as good. Then I'm going to conduct another set of ratio analysis. I'm going to do the same thing, good, excellent, excellent, good. I'm going to give it a good. So first step in intrinsic valuation and securities valuation is you have to conduct the financial ratio analysis to get an assessment of the overall financial condition and position of the firm. In this case, the overall financial condition and position of JP Morgan is good. Okay? So I feel good about going forward and starting to do the valuation. The first stock pricing model. There's four intrinsic valuation models. There's also a pricing model. The first pricing model is the technical analysis. Okay? And in the technical analysis, you're going to use a 3-year, you can go to stockcharts.com, you're going to use a 3-year chart with a 10 and a 20 and a 50-day moving average. And I can show you how to do that too. And then you're going to set the support and the resistance line and the trend lines in the pricing. So you're going to conduct technical analysis here. Then what you're going to do is if you have a solid trend line here, what you're going to do is impute the line out to this time next year and assess a target price of where you think, if this trend continues in this price pattern, where will the stock price be at this time next year? And you put that target price right there. And then you compare the target price to the current price, and then you're going to calculate the premium. And then over here is a dashboard based on the technical analysis. The RSI and the MACD. You've got basically the RSI and the MACD up here. You can see the RSI and the MACD are in an upward trend, okay, where there's upward momentum. This arrow gives you that upward momentum, upward arrow, upward trend line right there. Declining volume. Here's the volume in the shares that are traded on a daily basis. And as you can see, there's declining volume in the share price, or in the amount of trades that are actually being done. And then long-term upward price trend, got it. Boom, that's your technical analysis, okay? So that right off the bat tells you, outside of the intrinsic values, if the stock price stays on this trend, then the stock price is probably gonna reach 130 bucks by this time next year, okay? Then the next valuation method is your perpetuity model, okay? You'll be able to do a lot of this stuff by hand, okay? I recommend you do it in Excel, so you can practice your Excels. But the intrinsic valuation model is pretty easy. So over here, and again, do not mess with the format, okay? Do not mess with the format. Students like to mess with the formats. How many of these things do you think I read per quarter? Yeah, a lot of them. If they're out of order or the format's out of order, that's gonna slow me down and I'm probably gonna give it back to you or I'm gonna reject the research. You know, if I'm working as the managing director, I don't have time, you know, to grade your stuff. It's gotta be perfect when you give it to me, okay? There's no grading, you know, in the real world. They'll give you constructive feedback, you come up to the standards, and then you stick to the standards, and it'll make your life so much easier. So the first thing you're gonna do is apply the capital asset pricing model. I'm gonna check the risk-free rate to make sure that it's reasonable from a forward rate standpoint. I'm gonna look at the beta. I'm gonna ask you where you got the beta. The expected market return, you know that it ranges between 8 and 10%. And then what is your calculated return on equity using the CAPM? That's gonna be one data point within your sensitivities of discount rates. We're gonna calculate the weighted average cost of capital. We're gonna calculate the CAPM, return on equity, and then we're gonna plug the market, expected return on the market to create the 3 discount rate sensitivities that you're gonna use to conduct your intrinsic valuation based on the intrinsic valuation law. Then up here, you have a table that shows you last year's, this year's, and next year's earnings per share and the growth rates. Okay, so I get to check that. And since we're at the end of 2018, we need to put in here 2019 and 2020 earnings per share. Okay. I will take 2017, 18, and 19 too if you want to do it that way. Actually, 2017, 18, 19 is probably more appropriate than doing 18, 19, 20. Okay, because I only need 1 year of earnings per share projection to calculate the valuations using the first 3 methods, and then I'm going to continue to project them out over the 5-year holding period for the DCF. And then down here you have the different discount rates. This one is actually wrong because it goes from high to low. The discount rate goes from high to low. And then they put the stock price from low to high, but they say high to low. So I should probably throw this thing in the garbage. Right? Can I give this to the board? Sorry. So that's the first, and then we usually pick the midpoint as the valuation. Okay? Then we take that number, we put it up there, compare it to the current stock price, and calculate the discount of the premium. Okay? Then in the Gordon growth model, it's the same CAPM table, it's the same earnings per share table, but down here what we have is basically the sensitivity analysis. We have 3 discount rate sensitivities and 3 growth rate sensitivities. Okay? And then what we do is we just I will go through this and show you, I will walk you through the whole valuation procedure for Goldman Sachs. And then you go put the deck together. Okay? You're not doing individual stocks. I will walk you through it. What I'm trying to do is to give you back some of the time that you spent in class, in the first 2/3 of the class. I'm giving you that time back now to go work on your other classes. Okay? So I'm going to try to make everything as easy as possible. If you want to make things hard for yourself, don't do it. You just make it hard for me and you. Don't do it, make it easy. Okay? And don't second guess everything. Just follow the instructions. So the multiple approach right here, this is where a lot of students make their mistakes too. Okay? Is they don't put in the earnings per share table, that's not there, or not the right one. And then what they do is they just put JP Morgan or Goldman Sachs PE multiples here. This one has the 2017, 18, and 19, so I have last year's multiple, I have the 2018 estimate, and I have the 2019 multiple, and I have it for the top 5 banks. So, and I'm going to show you how to calculate. We already did it on the midterm where I showed you how to manufacture multiples using the perpetuity and the Gordon growth model. I'll show you how to manufacture a couple more multiples, and then we'll use the peer group multiples to guide us on what multiples we want to use from high to low as the sensitivities to apply to the 2019 earnings per share to get the intrinsic valuations using the multiple approach, okay? And then you take that number, that valuation, you plug it there compared to the current price, you calculate the discount or the premium, okay? And the bank stocks have rallied significantly over the last year and a half. They did really, really well. But with the Lloyd's little escapade in Singapore, a new president, and some pressure now with a Democratic House that's going to be overseeing, you know, the banking committees and the judiciary committees and the Treasury oversights, the bank's profits could be squeezed, and we'll see what happens on that shakeout. And there could be more regulation and less deregulation that's occurred under the Republican-controlled House, Senate, and presidency over the last 2 years, which has been beneficial for these banks. And then we have the discounted cash flow methodology. Now, over here, the table is not the capital asset pricing model, but the weighted average cost of capital. So I'm testing you to see if you know how to calculate the WACC. And again, I will calculate the WACC for you, but next week when you come in, and when Sarah comes here, you got to go online and you got to get access to the data and the information so that when we come back next Thursday to start doing the valuation process, you have to have that data available to me so that we can blow through the valuations, okay, and get that stuff done as soon as possible, okay? Because I want to get this done as soon as possible, okay? So then down here you have the discount rate sensitivities. Over here you have the 5 years of earnings per share. You calculated the terminal value. You add the terminal value to the last year's earnings per share. You discount it back in that 5th year. There is the present value of the total cash flows in the 5th year. You do it for the 4th, 3rd, 2nd, and 1st. Add those all up. It should equal the intrinsic value right there and the intrinsic value right there. Get it, Felix?
Yeah.
Understand? Then you take those values, you put them up there compared to the stock price, and you calculate the discount of the premium. Okay. Then the next page is your weighted stock valuation, which you've already done. You've already gone through this stuff. So you put the intrinsic values here. You got the weighting scenarios. You have the weighting scenario that you're going to pick in the middle, and you give the recommendation. You take that intrinsic value, put it up here, compare it to the current price, and calculate the discount or the premium. On the next page, you're going to have your recommendation. This is the recommendation you're going to make to the proprietary trading unit, to senior management, the investment committee, your clients. So this is what will be the most important slide in the deck. Now, this is extremely important. This is where a lot of students fall down. Okay, is they do not pick a charismatic person within their team to open and close the deal. Okay. A lot of times they put the weakest person, who is more of an introvert and can't really communicate, to open the argument and close the transaction, okay? You have to have somebody that can open this thing right up front and sell us the research recommendation. And you need somebody that can close the deal and convince us that we should sell the stock, okay? Or implement these trades. So you're gonna have to battle that out within the psychology of your group, figure out who can communicate what within the presentation, and how to transition between the sections of the presentation smoothly to make it look as professional as possible. We will also be doing a survey. You will be critiqued by your peers. I will give them a survey form in which they will critique your presentation, your group's presentation, and give you some brutally honest feedback on your presentation, okay? Because you need it. You're gonna need that feedback, because nobody's gonna let you walk into a presentation and blow it, okay? There's too much money involved in all of these presentations. You're gonna be controlling millions or billions of dollars because you're a business major, okay? So you have to do these things perfectly, and you can't blow it, okay? So here you have the sell recommendation right there. You have the intrinsic value next to the current stock price and the discounted premium. Since I'm doing a sell, there's a total of 12 trades. Now, JP Morgan makes up a significant portion of the financial services stock indexes in which the forwards and futures contracts are being written on. So if JP Morgan stock price is going to go down, the financial services indexes are probably going to go down too. So here are my derivative trades right here, and I have 4 of them. Based on the financial services, and it actually doesn't have it here. It should say Star Financial Services. And then JP Morgan makes up a significant portion of financial services exchange traded funds traded on the exchanges. So if JP Morgan's prices are going to go down, stock prices are going to go down, the ETF shares are going to go down too. So our recommendation is to sell short, buy calls, and buy puts. And again, as we know, it's the same for the stock too. So we have 12 total trades. Then here's where the students make a mistake too. They usually go here and say, here's our final thing, here are our references. What I would do is I would say, here's the references and the resources that we used for our research, and these are our recommendations.
So on one slide.
So you go 1, and then you go back. You go to the references, say this is our supporting material. And then you go back and you say, this is our recommendation. Okay. Usually what we would do, which I haven't required that you do, is usually there's one more page here. If you guys want to start at the semester, I would do it. Usually there's one more page, and it's a signing page, okay, where you sign off on your research. So you will have your name with your acronyms, PhD, CFA, CPA, CFP, whatever it is. Most of them have CFAs, designations, or CFP, or they have their CPAs, or PhDs in most cases. The person's name, portfolio manager. Second person's name, equity analyst. You know, either associate or equity analyst, they usually have a CFA designation or their CPA too, or a PhD. And then you have your other equity analyst too. It could be an associate, or it could be senior, whatever you want to do. And then next to your name, there's a date and a line where you sign it, okay? Because we have to sign it, okay? We have to sign off on the research, okay? Because it's binding, okay? And it basically tells who you're presenting, that you're willing to put your reputation on the line and be legally responsible for the results and the recommendations of the research, okay? No, you're going to be signing off on a lot of stuff, okay? And once you become a CPA, you're going to be signing stuff. And if you become a CFA, a CFO under, what is it, Sarbanes-Oxley, you're going to have to sign off on all the financials in the publicly traded company. So you sign off on it, okay? And then that's it. So you're going to do a formal presentation in professional dress. I've already videotaped a bunch of prior student presentations and made those available to you. This is the section on the website, okay, where some of the resources are. The first is the Financial Institution Publicly Traded Stock Analysis and Valuation Guide. It basically went through a bunch of my books on banking and securities analysis and put together a primer. So if you're really interested in this area, you could read through that primer. It would probably give you some background information to be able to talk more knowledgeably about the valuation from an industry perspective, okay? Because you may be part of the financial services equity research group at Goldman Sachs, okay? And that's all you do is this type of research for the top maybe 50 or 500 publicly traded banks in the United States. And then you have the some intrinsic valuation research reports. I have an example of emergent Excel printouts that I did. These are a little out of date, but you can see what they look like. Here's the Standard & Poor's reports here, some other industry reports on that industry segment. Here's some PowerPoint pitch books from B of A and Wells Fargo. I cannot guarantee that all of these are perfect in any way, but I did try to pick the ones that I thought were good and put those up there. I also have intrinsic stock valuation YouTube training, not only the training that I've done in the past a couple times, and then I will also record all of my training lectures for this exercise, and then make those available to you for review if you need to look at it. And then, again, some more research reports, and then the example student presentations. So what I did was I went in through and archived a bunch of the videos of the PowerPoint presentations and picked some of the best ones, and then put those up there for you so you could see how some of the students approached it and how they presented. And they were really, I would say the majority of them were really, really good. And usually the first two teams are usually the best presenters because they want to go first, okay? They're hungry, they're prepared, they want to do it, and they want to do a really good job, okay? So we're going to have to divvy up and figure out who's going to go on Tuesday and who's going to go on Thursday, okay? So if you look at our schedule, let's look at the syllabus so we can do some planning. Does everybody have a team? Everybody in a team? There's no ones or fours floating around? No ones or fours? You guys can still work in form, but you have to present as two. Okay. And you guys might have some slightly different numbers too, because you might think the growth rates are going to be higher or lower. Or
We might just do it ourselves.
You might want to do it, yeah. And I can work with you too.
Okay.
But I kind of laid it all out. I tried to make it as easy as possible for you guys.
Yeah.
Because I'm going to walk through the whole valuation process. Okay. So let's take a look where we are. All right. So today was the introduction, the orientation, okay, which is correct. So we're pretty much on track. And then November 13th and 15th. When is Thanksgiving?
27th.
The 20th. Okay, good. So we can do the chapter. We can do the chapter presentations next week, and then we can also start on the valuation process. Okay, start valuing it. But if you come, on Tuesday, already going into Emergent and doing some research on Goldman Sachs, that would be awesome. And then Sarah's going to kind of really show us some of the shortcuts to getting access to the data. And we can start pulling that data, so next Thursday, we can be, bam, ready to start just pumping out the valuations. So I'm going to, I'll go through that with you. So the 13th and 15th, I would love to have the valuation work done next week, wouldn't you? Yeah, so that what we can do, if you're open, because I usually find that during Thanksgiving week, that half the class doesn't show up and the other half of the class is checked out, okay? You guys go brain numb, I think it's just turkey and you guys are ready to go, right? So I'm thinking what we could do is for that Tuesday, if you want, for those who want to meet with me, you could. Or what we do is you can email me, your presentation, and we do a conference call, or we do a Zoom room, okay? Do you guys know how to use Zoom? Yeah, does everybody know how to use Zoom? Does everybody have a Zoom account? You gotta go to IT and get a Zoom account, so you can start using that technology, okay? And it's really cool, because you can have all the people on the call, and then you can do a screen share, and you can walk us through the presentation, and I can give you the feedback right there. And we all need to get more versed in using WebEx and, Skype and Zoom and all that stuff, because we're gonna be working in virtual teams and agile teams and flexible teams going forward. So we gotta be more versed in the technology, okay? So you can decide how you wanna do it. If you wanna meet with me, which I don't recommend. If you wanna set up a conference call and email me, we can go over it that way. We can do a Zoom room. You tell me how you wanna do it, or if you do wanna meet with me, we can meet early in the morning. Either on Monday in the morning, we can meet early in the morning, Tuesday in the morning, we can meet on the Monday following Thanksgiving. I'll be available all day that day, and then you want to perfect your presentation so that you can do presentations, right? So we're going to do Thanksgiving should be the review, and then you need to tell me who's going on Tuesday, the 27th, and who's going on Thursday, the 27th. And I will probably, when you come back on Tuesday next week, I will have Tuesday and Thursday up on the board, and you guys can battle it out on who's going to go Tuesday and Thursday. Okay. Everybody wants to go Thursday. We don't have enough time. Some people are gonna have to go Tuesday, some people are gonna have to go Thursday. On Tuesday or Thursday, you're gonna print out the PowerPoint presentation. Do not print it out in color. Do not print it out in color. Print it out in black and white and staple it together up there, and we'll have one slide per page, okay? So that when you come in to do the presentation, bam, you give me the presentation, I'm going to sit down with my Sharpies, and I'm going to start marking it up and editing it, making sure it's perfect. And then after you're done, I'm going to give it back to you. You're going to go correct it, and you're going to bring it back to me. And we're going to go back and forth until I go, you're done, go to the print shop, and go produce it. Go to production. And then on Tuesday and Thursday, Tuesday, this is what, section 2. So we're going to be doing, section 2 is Tuesday, December 4th. Oh, you're so lucky you're not in section 1, because the 8 a.m. session is just brutal. People are like hungover and tired, it's just cranky, stuff like that. Maybe I should bring them breakfast. Waffles actually makes people happy. So then what you'll do during the final day, again, is you'll bring me the deliverable, or for those who procrastinate, we'll be assembling their deliverables. We'll do that, we'll chill for about a half hour. I'll do the exit lecture. We'll probably have another 10 or 20 minutes, and I'll collect the deliverables, and that's it. Okay? Any questions? Yes?
It's not about this. Do you have also the problem set ready for problem set number 3?
I should. I might have turned it on, let me know.
Okay.
And then what I'll do is I'll make copies of it and bring it in. Okay. Okay, any other questions or clarifications of the expectations for the final part of the class? Yes.
So do you want us to bring all our deliverables online?
No.
Or just the third?
Now, if you haven't gotten a full grade on it and you still have some makeup stuff to do, then like either the notes or the midterm piece, make sure you get your memos signed off on me. It's just like, oh, these are great, boom, go print them in color, put them in this order, staple them together, you're done.
Oh,
Okay?
it's okay.
And if you want to bring in the deliverable to have me audit it to make sure that it's correct and is up to standard, so you know you're going out with an A, I'll look at that too. Okay. So it should be, there's not that much homework. and the problem set's
Yeah.
smaller. So I'm trying to give you back a lot of the time that you put in the first third of the class, like I promised at the beginning of the class. Okay, all right. And we don't have any presentations
Is there a
today
problem set?
or anything? Okay, so why don't we do that on Tuesday? Why don't you guys come with your presentations, edit them all down, and then let's pound out those chapters, let's get that stuff down, and then let's pound out the valuations next week. Okay? Okay, awesome. Yeah, is this in 12 point? And then, Mary Beth looked at it? Okay, yeah, why don't you just double check with her and then come back and see me? Okay. Okay. All right, let me go post it.
Do you need this group or?
Yeah. What was your last name again?
Russell?
Russell.
Yeah, I'll get.
Okay, Nick, you're all set.
All right, thank you.
You're all set too. If you could leave me the pitch books, you can borrow the pitch books if you want to, but you gotta bring them back. Okay. You can take 3, but you bring them back.
Well, I'm gonna throw a marketing, like, a slot after it, like, we can do a background on get that out the way.
Yeah, you're good.
That's your real thing.
Very good.
Like the operate, but they're not, when it gets to the valuation.
And then did you have the resume?
That you need the data.
Yeah, I need it too.
I'll have to find it, have it, switch it back already. Switch back to the same. I mean, the last question.
No, when do you want to start the,
You guys are power tier, aren't you?
Yeah.
Takes things easier.
no,
doesn't it?
for the,
All of us.
Yeah. Yeah, right.
After presentation 4 and we shared it, Chris.
Did you problem set number 2? Especially if people might
Well,
want.
we got these shows up, so we'll try to talk on Tuesday about it, yeah.
And then find some parts.
Meet maybe 1 or 2 times per week, so.
Yeah.
You'll come.
Yeah.
Here, let me get it back. We want to see this. Yeah, they want to take a picture and send it to their parents. Come see.
you just wanted me to show you that movie part.
Okay, Eric, thank you very much.
Yep, no problem.
I know version of the memos for now, so I wanted to.
Okay. And then, is there anybody else?
Yeah, I had to revise the memos and just wanted to show you that I completed the brief.
Okay, cool. And did you want me to look at your memos?
Yeah, so I can just have them.
Okay, great. Put them in there?
Yeah.
We want to start working on it.
Probably pretty soon. Maybe this weekend, Sunday.
Sunday.
It's
Sunday
like,
afternoon.
it's like it's sort of a lot.
Yeah, informative,
And
Okay, you can. I already gave it to you.
like copies.
So if you're gonna hold on, I just want to, so did we sign off on this?
I think there's only.
Did I tell you to go, print it in color?
You did direct me to do that.
Did I? Okay.
Yeah, you were doing color.
Yeah, Sunday. Good.
Yeah, you just need to state. Does it cost you to print in color?
It's school, yeah, school printers, like,
Okay, so it's not a big deal.
I think you could do like 50 prints a semester.
Can you? Okay, that's it. So just make those last corrections, print them out, staple it together.
alright.
I'll stop torturing you.
Fair enough.
Yeah, these are all correct.
Yeah.
So here's the thing, what I would do is just say, in October, the Treasury was passed to 4% indicating inflation. Oh, okay, got it, that's fine. We already did that. See, rise and up, it's contradictory. You don't need to say rise up,
Oh.
just rise. And then you need,
Stop.
yeah. You need this one. And your nice periodic columns. Oh, and these need to be centered. And this is, you gotta find bond indexes. Are these bond ETFs? These are companies. Yeah, make sure that these are the same width. Oh, this one's larger than the rest of these. And I don't mind having tickers on 2 lines,
Okay.
okay? Just take a wrap, so just double check, make sure all these are, that they're equal, yeah. When you're missing an index here. Make sure all of these are equal width. That one looks pretty good. This one's bigger than the other. All the graphs and stuff look fine. In September, yields on venture capitalists. Okay. Oh, so you did look up the next. Do you know over what period of time it rose that much? That's nice. It's a semicolon first, and then a comma. Great. And again, any corrections up here will be done after. And then take this text right here, all of this, and just move it down just a little. So it lines up with the graph, leaving a little space right there.
Space between the graph and US inflation.
Yeah, the table,
Okay.
and the same thing here, a little more spacing, because you have room. It just makes it easier when you're reading, when you have white space strategically placed on the page. On those lines. Do you know in August how much it fell? Do you know how many basis points? Do you understand when I say basis points?
Yeah.
Okay, so you just calculate the difference. Down some basis point, probably not the dollar. December. Cause they didn't raise rates today. Ranging from blah, 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 blah. Oh, you said it right there. Sorry about that. Felix, did you have something? Okay. Can you narrow this space right here, and here?
Okay.
You have just too much.
See that?
Yeah.
And then move that over. You have the wrong trades. It needs to be right,
Oh, oops,
buy,
yeah.
sell short,
Yeah.
ETF, sell short, right, buy, right, buy. Now, what does this tell me? How does this support this? We're talking about stocks here. So, if the stock market is doing really well, then people are selling bonds and buying stocks.
Yeah.
Okay, then I would say something like, based on this performance, investors are selling bonds and buying stocks.
Okay.
Something like that. And you need to add more here.
Okay.
Okay. I like to have at least a couple sentences.
Okay, cause like the first time you, went over my memos, you crossed out a lot of stuff, so I thought you wanted it short.
Yeah, what I would do is I would consolidate these two
Okay,
and then find another
okay,
paragraph that will support this. Okay. And then what you can talk about is budget deficit. Right?
yeah,
Because there's a lot of paper coming out.
yeah,
And then I would also do QT, quantitative tightening, where the Fed is selling off. I think they're doing like 40 billion per quarter.
okay,
And you could probably find that data. Okay. That would totally support that.
okay.
Okay. And that's really interesting too. Gross domestic product grows when?
In 2008,
4%. Are you sure?
yeah,
Okay. Double check.
okay,
2018. To blah, blah, blah billion dollars. And these things usually need to kind of line up. Okay, spacing is fine. Are these bolded?
no,
Got it. Okay. And then what I would do is move the text over a little bit like that.
so you want it half and half-ish,
Just move it over because it'll fill this in a little bit.
okay,
Okay. That's kind of a way how I kind of cheat to kind of fill in this space.
Okay.
And make sure this is 12 point.
yeah, it is,
Okay.
yeah. I don't know why, cause I do it on a Mac and I send it to Windows and it's
Yeah,
sometimes
that's what I hear.
different.
And then here, this is confusing. What I use is 25 basis points.
Okay.
Basis points to a range of, and then I go like this, 2% dash, 2 dash, 2.25%. USD. So since you use this the first time, you have to spell it out.
Okay,
US dollar. Gain 7% when? Oh, here we go. Gain 7% against the euro over about 6 months period. US pounds. Base 10% tariff on local Chinese good. To begin and deliver like to have a couple sentences,
Yeah, okay.
you know. I'm not a big fan of just one sentence. Usually like to support your arguments with a couple. Okay, and then you, okay, we've already gone over that.
Yeah.
What is this as, what is it, like September? Inflation rate, is that too low? Highest cost factor. Do we know what was driving it? Real estate, oil, or gold, or something, get rid of that space right there. Okay. And September. You usually have to put the time period up front.
Okay.
Okay. Period. And you might even be able to find some, the monthly job numbers,
Okay.
which was like 250,000.
Yeah.
You might want to mention that.
Alright.
And GDP, you need to spell that out.
Okay.
And then put these in parentheses.
Okay.
And you gotta give me the time period.
Yeah.
Oh, there you got it right there. Okay. And you might even wanna just say comma, you know, driven,
Buy something.
yeah, by something and, or something and something, something.
Okay.
Like that to kind of give a little context, you know, to the analysis. Okay. Again, you gotta. When you say therefore, I like to use these semicolons like that, a little neurotic.
Okay.
Is it premiums? Just pay more. Well, and $1 is the reserve. Let's see, most international transactions. I would use increase. Use rising.
Okay.
Okay, that gives you kind of an idea.
Yeah.
And then you wanna try to think about, when you start editing your paper now, try to think about the style in which I'm doing the edits.
Yeah.
And try to replicate that.
Yeah.
Okay, cause that's how we write.
So everything should be in here, I just wanna ask you if, the memos like something, level.
Do you have them?
Yeah. They're behind the tables.
So you put in that. What's your major? Okay. You might wanna consider consolidating and then the space that you have, talk about the applications that you're using in doing big data analytics. Okay, you know, portfolio optimization, linear regression, multiple regression, chi-square analysis. I don't know if you guys do like nearest neighbor, you know,
Highlight those skills.
yeah, the statistical applications within the big data environment, along with the computer applications.
Okay.
And then make sure that when you go through the program, that everything you do, you have to repackage it into something that you can show somebody.
Okay.
You know what I'm saying? Since I did this, I did this, I did this, I did this, and they're gonna go, freaking great. And then don't use oh, that's division one. Okay. I have graded all this stuff.
Yeah. So I just wanted to ask you what the memos were.
Okay. That's that. I'll remind me to just double check your grades, so that I make sure that I look. Okay, yeah, you're good, you're good. So we just need to look at this and, great.
And I was also, I wanted to ask if I could have one of these over the weekend.
Yeah.
Is that okay?
You can even take a few of them if you want.
Yeah.
Yeah. Okay, so let's do this. Now, did you double check this?
Yeah.
Is it all correct?
Should be. Numbers.
Yeah, it should. I already gave you the grade. You did such a great job with that stuff. You're in. And I might have to rely on you to maybe tutor some other students that are struggling.
On the nose?
Yeah,
Okay.
okay?
That's fine.
And there's some extras.
Okay, perfect. Because
blew you off too. So don't take it personally.
Yeah. Oh, yeah.
I was hoping you didn't come because it was like, I'm gonna feel bad.
Yeah, the
Sometimes I
little-
just gotta sleep in, I'm so tired.
Yeah.
'Cause I work Tuesday nights too.
What do you do now?
I like teaching other
Teach.
at another school sometimes. I don't get home until like 11 o'clock.
Every night?
No, just on Tuesdays. Although I'm trying to scale back.
So it's not,
Gonna do that.
but you want me to get this to,
I just correct it, make these corrections,
Yeah.
print it in color, and then
Okay.
keep them and put it in the final deliverable.
okay. Thank you, sir.
Alrighty.
All done. Killed it.
Oh, yeah,
Oh, yeah.
oh, yeah.
You want these back, right?